Welcome back. A press conference this morning by Chinese officials regarding their recently announced stimulus measures has been seen as a disappointment. As you can see, the Chinese and the Hong Kong stock indexes fell from their intraday highs after the press conference. So how effective are the recently announced monetary and fiscal stimulus measures to pull China from its debt deflation loop? We have with us Morgan Stanley's Asia Pac chief economist, Chetan Ahya. Good morning, Chetan. Thank you very much for joining us. Of course, there is an all-important RBI policy as well tomorrow. But before that, let me start with China. How did you interpret the press conference? Did you get any fresh, insights into the stimulus measures?
Well, so Latha, we were looking out for this announcement from one and only single perspective as to whether they are going to push up their fiscal deficit higher and what is the scale of fiscal expansion. And secondly, is this fiscal expansion going to be targeted towards consumption? Because the need of the hour in China is to lift fiscal deficit and target it towards consumption to address the deflation problem. Having said that, what we heard from the policymakers is that they are going to take up a very small effort towards demand stimulus, i.e. pushing in for consumption. And there was no number given in terms of the magnitude of fiscal expansion that will be taken up. It wasn't likely that they were going to make a full announcement today, but the contours were even lower than in terms of the details than what market and we were expecting.
Okay. Can you take us through your understanding of the measures announced before the holiday week? They had announced a fiscal package, and some of the interpretations of that were they were going to give some money to families with 2 or more children, and that they were also going to raise special yuan bonds, and that yuan will be transferred to local governments. Can you interpret the fiscal steps announced so far?
So they announced 3 things on that day. I think in the week of September 22nd. On 23rd, they announced a set of measures, and then there were some more later. But then effectively that was focused on, number one, to boost the stock market. There was a re-lending program announced by PBOC for that. Number 2 was some support to property sector. And number 3 was to take some real economy measures in form of monetary and fiscal easing. But the fiscal expansion number was not given. They just mentioned that they will take up fiscal expansion as necessary. It was a Reuters news story which was speculating that they will announce a 2 trillion RMB fiscal stimulus targeted towards, in part, for local debt restructuring, and 50% of that 2 trillion was going to go towards consumption stimulus. And so I think it was just that Reuters news story which had raised expectations. And then today, we didn't hear any number in terms of 2 trillion RMB stimulus or even some kind of detail of a big consumption stimulus.
So this is a major disappointment in that case. We suspected even the week before when we were reporting this statements out of China that they were not, official government statements. They seem to be more interpretations. So now would you scale down your China growth, considering that you don't have any confirmation of effective fiscal stimulus?
So we have already cut down our China growth, and we have brought it down to 4.6% versus the government target of 5%. And, if there were to be aggressive policy actions taken, we would have had to lift our growth estimates. So as of now, we are going to stay put with our forecast. But just in terms of framework of looking at the China story, Latha, so the way we were thinking about is that considering the fact that they have this deflation problem, unless and until they fix that deflation problem, all the actions taken to support the stock market will not result into a sustainable turnaround of confidence for investors. And I was drawing in from our experience of looking at Japan in the past. So Japan, when it announced first round of ETF purchases for stock market boost, alongside some monetary policy easing measures in December 2010, there was about a 20% rally in topics. But that rally did not sustain because the government did not follow up with action plan that could fix deflation in a systematic manner. So we are operating with that same framework as far as China is concerned, and therefore market is also probably, looking out for this fiscal expansion far more closely, whether they are going to be able to fix that deflation problem.
Okay. Now, I know this is not your area at all. I'm going to ask you a market question. So does your team suspect that the market has overestimated a possible Chinese recovery and, more importantly, a commodities recovery? Now, does it look to you that there will, in fact, be the continued disinflation and the rally in commodities may be questioned?
So, our equity strategy team has, put out a note today morning, and they're still maintaining underweight on China. And it's sort of similar to the view that I mentioned earlier that, we will need to see more evidence of fiscal expansion targeted towards consumption for us to change our view that China will be able to get out of this, debt deflation loop, or call it the deflation risks.
Okay. Fair point. I wanted to try and get in a couple of statements on India as well. How would you expect the Indian central bank to react? We've had cuts by two big economies, in fact, three: EU, US, and China. Will that have any impact, or is this going to be a no-change policy?
I think this policy definitely is unlikely to be any change because, if you kind of listen to what the governor has been mentioning earlier, he wants to see 4% inflation being achieved on a durable basis. I think we are not there yet. For the month of September, we should see inflation going back up to about 5%. At the same time, if you look at even underlying inflation, we are still around 4.5%. So we're not close to 4%. And at the same time, if you look at credit growth data, it is still relatively healthy. Credit growth is still running above deposit growth. So I think it would be too early for RBI to take up a rate cut in this policy.
Okay, no, fair point. More to the point, tomatoes are selling at 120 rupees a kilo, potatoes at 60 to 70 rupees. We have a very serious vegetables inflation, and I don't think that's lost on the Reserve Bank at all. So food inflation may continue to prevail. A very quick question on the global disinflation that you were the first to write about. Does that continue? Are we going to see this pressure on WPI in India, for instance?
We think that will continue, Latha. To the extent to which China's deflationary situation is not changing, in our view, not changing very quickly. So this will continue in the coming months. At the same time, what seems to have happened is that global goods demand-supply balance has improved now, with supply coming back on stream, and global trade and global goods demand is not that strong. And so I think this disinflationary trend that we are seeing will continue.
Okay. Thank you very much, Chetan Ahya, for giving us your understanding of, how the China steps, what are the China steps and how they may pan out. I think the market is listening very carefully to what Chetan has said. They're seeing a recovery here. Indian stocks lost a lot on the assumption that foreign money is fleeing to China. But clearly after the press conference today and Chetan Ahya reiterating that his equities team remains underweight on China, we are seeing a return of strength to Indian equities. We actually sign off on Bazaar on a high note. It may probably also be the BJP victory in Haryana. We wrap up on Bazaar on that high note. Chartbusters coming up.